What's going on? Apparently, the United States is now weighing, at least delaying those tariffs while these talks continue. So that gave a little bit of a move for the Mexican peso, but it's been a pretty rough ride over the past couple days, worried that these tariffs would kick in. So what does it tell us about the currency trade and about the current climate when it comes to trade? Let's get some insight now. Adam Button is the chief currency analyst at Forex Live, and he joins us now. Good to see you, Adam.
Hi, Greg.
So these are interesting times. We thought everything was cool between the United States and Mexico, given the fact that we had negotiated a new NAFTA. This happens.
Yeah, it really came out of nowhere. I mean, we hear this about, okay, we're talking about Trump's, and you don't really want to apply it to an immigration issue, and this is something a little bit different. Yet Trump was willing to go to that well once again. Now, I'm like most of the market, and we're trying to figure out, the question is, what is really priced in? How likely is this to happen? And it's a very difficult thing to weigh right now.
Definitely. I always ask you about, currency traders or anyone. If you're trading equities, you're trading currencies, you're trading bonds. In this atmosphere, you just don't know what's going to happen next. That caught so many people off guard when Trump said, I'm going to use a tariff because I'm angry about immigration policy. And everyone thought, well, we weren't expecting that.
And you try to get a gauge from markets. Okay, what's priced in? How likely is this to happen? Can I stay into this? And I think it's a great spot to look at the Mexican peso because it's only down 3%. This is a pretty dramatic action, and that's a relatively small move. For perspective, when Trump was elected, it fell 12% the next day. So the market isn't pricing in 25% tariffs, or probably not even 5% tariffs. So that market's really directly correlated. But you look at other markets, oil's down 12% just in that same time frame. The bond market has moved in to price a full rate cut. So the message is, okay, maybe, and this is the way I see it, it's not going to be tariffs on Mexico, but you have a president who's really willing to go to tariffs on any issue right now, like a true tariff man, like he called himself. And I think it's even more worrisome than just an individual action with Mexico.
Right, so that's an important one to watch in developments in this hour, the fact that they might delay those tariffs as these talks continue. We're also hearing from the European Central Bank, Mario Draghi, is willing to dig deep again. Does Europe ever get out of the hole?
It was interesting. The market tried to rally a little bit here. They were thinking something might be more dovish, more of an indication of hikes, and the euro kind of went up, and then it came back down. And the forecasts come out from the ECB, and it's maybe 2% growth this year, 1.5 after that. And you're looking for something to buy other than the U.S. dollar right now because of the tariff story. And you look to Europe and you say, there's just nothing to love here. At best, you have a middling economy. And the euro sends that message over and over again. Like, you try to get excited about it, but there's always something. There's always some skeleton in the closet. And then, if things were to get bad, that's what you kind of look at. Okay, we do go to a tariff war, slower global growth. Well, what happens then? Well, in Washington, you're probably going to stimulate. They're willing to spend. Whereas in Europe, they're just cash-strapped there, and they have this endless austerity. So it's just tough to get excited about the euro.
Is it harder and harder these days to call the U.S. dollar trade as well? Because we think of the U.S. dollar in a number of ways, but probably most as this, that haven currency where in troubled times people will flock to the U.S. buck. But guess who's causing all the trouble? The United States.
Yeah, it's an interesting paradigm because you want to look individually how the tariffs are going to affect it and how it's only going to affect the Federal Reserve. But you even look at the Bank of Canada or the European Central Bank, and they're saying, all right, if the Fed cuts or if this trade war happens, we're going to cut as well. So you're stuck with this safe haven currency as the U.S. dollar. At the same time, you try to isolate the White House. And we're going to say there's a deal today, which I think may happen, or a delay. And Trump might come out and say tariffs work. And I think that's worse than a deal because it's
That's true, yeah. If he gets a deal now, then he just basically says, look, I held their feet to the fire, and the fire was tariffs, and I got what I wanted in a few short days.
And then he's going to say, okay, let's do more tariffs on China. Let's do tariffs on European autos. So it may be very short-lived in terms of how the market reacts, and that's going to be very telling in the week ahead.
Now, of course, when it came to the tariff that was a sore point between Canada and the United States, we finally got that one out of the way, the metals tariffs. But I guess we can't rule ourselves out. I know that Donald Trump, even when that day, it was funny, we went to him live the day we were talking about the metals tariffs being dropped. I thought, well, what's the president going to say about that? And he was beating up on us for our agricultural policy.
And it's interesting because now you start to get the sense that, okay, this can all fall apart very quickly. And you want to look to, I think, the Senate and to Congress. And if they stop him on Mexico, they'll probably do the same on Canada. Now, if he does put on these tariffs, and will Congress genuinely push back and put a stop to this with two countries that are America's closest allies. So that's where I'd look to on that. But Canada, if it becomes a global growth story, Canada's in trouble. I think the Canadian dollar's held up this week. It's been a U.S. dollar story, but if we continue to see oil fall, we continue to see central banks talk about rate cuts, it's down, even though it's stemming from the U.S.
Yeah, I'll show the audience the Canadian dollar, because we were on a little run there for a while, and we've seen some sort of fluctuations in the past couple of days. Where do you think we're headed? Down to 72?
Yeah, I think it's really a day-to-day trade. I mean, there's no getting away from it. I like the Canadian dollar. I think housing's done a lot better. Vancouver housing's struggling, but Toronto's leveled off. A lot of the real tail risks are out, but we've seen oil, like I said, down 10, 12%. Very quickly, and the Canadian dollar's held up despite that. So I think there's some good news there. I think the Bank of Canada is pretty constructive and will probably go higher, barring no escalation in the trade war, but you just wait for the tweets and headlines.
I guess it gets rough as well, right? When you have a Fed that's suddenly become not only so patient, but almost some of the comments this week downright dovish, it's pretty hard for our central bank to chart its own course as much as it might want to.
Yeah, and it is a little bit of theater with all that, right? They see financial markets. They are really, truly beholden to financial markets. There are no illusions about that, I think, among market participants. And so if it gets worse, they're going to cut. The Bank of Canada will cut. And the Bank of Canada has a lot of room to cut. I mean, not quite as much as the Fed, but it would hit Canada a lot harder. And I think they may be willing to step on the gas a little bit harder. And that's why the Canadian dollar would suffer more if things go badly.
Always great to have you here, Adam.
Thanks, Greg.
It was Adam Button, the Chief Currency Analyst at Forex Live.